Hey everyone, welcome back to my channel once again. This is your friend Abhishek, but not a financial advisor, and today we are going to talk about what's happening with CPI numbers and where the market is heading and what am I doing, what I'm buying, what I'm selling. So without further ado, let's get on to it. So as you can see, the inflation numbers just came out now at the time of recording this video, which is 12th of December. So inflation cools further in November as energy prices fall. Housing cost remains sticky. So housing costs usually during inflation and deflation tends to remain sticky because these are the assets which are really, let's say, they take a lot of time, because this is one of the assets which take a lot of time to get that effect from the economy, inflation or deflation. So inflation cooled in November on an annual basis, bolstering investors' hopes that the Federal Reserve will hold interest rates steady as its policy meeting this week. So this will be tomorrow. But prices increases did tick up on a monthly basis, adding to the debate over when the central bank will start to lower the rates as inflation eases up back towards its 2% target. So now when this news came up, the indices were moving higher, probably because of the expectation that Fed might lower the rates, but that is a foolish expectation in my opinion, guys. No offense to anyone, because if the target for the core inflation from Fed is 2%, which we heard in all the calls, Fed calls, then how the hell people think, or the investors are thinking, that the interest rates should start coming down? It's not possible, guys. If you would like to take the inflation down, like I've mentioned many times, it should have been around 5 to 6%. To fight 4% inflation, it should have been, the interest rates should have been at 8 to 9%, but still they are at 5%. So we should be happy and glad that still the interest rates are at 5%. So we should not be talking about inflation interest rates coming down anytime soon unless they reach the target. So according to the latest data from Bureau of Labor Statistics, prices rose 3.1% over the prior year in November, a slight deceleration from October's 3.2% annual gain. So this is good. Okay, economists had expected the consumer price index to flat month over month. So the economist had expected the consumer price index CPI to come in flat month over month and rise 3.2% year over year, according to the data of Bloomberg. Now what happened? So the main thing which actually brought the CPI numbers down or steady were the energy costs. So as expected, lower energy costs held the headline figures to a smaller gain, with the energy price dropping 2.3% month over month and 5.4% on annual basis. This was dragged down by the falling gas prices. So the gas prices had the main effect on the CPI, which declined 6% from October to November and 8.9% on an unadjusted annual basis. So this is the main driver for the CPI now. So that's why we cannot say that really the inflation is cooling down. So there are some part of the core CPI, for example, food, energy, rent, personal care, vehicles, gas. So gas was the main reason why the CPI numbers actually looked good. But then there are other factors as well, like I said, which are not, let's say, cooling down so easily. For example, the housing market, we saw that it's a bit sticky. On a core basis, which strips out the more volatile cost of food and gas, so taking out the food and gas, so the prices in November climbed 4% over last year. So the core inflation is still at 4%, guys, still at 4%. So this is what I would like to say, that with the core inflation sitting at 4%, we should definitely not expect that the Fed will try to cut down the interest rates. So the hawkish agenda will end probably, but this interest rate will remain around 5 to 5.5% or 5.7%. So this is what we should expect, that it might stay like this unless we see a deceleration in the CPI numbers, and then we can think that okay, a market rally might happen, or the market rally might happen even before, even if the Fed says that okay, we will not increase the interest rates anymore, so it is off the table completely. Then yes, we can expect a rally. But until now, I would say that you can expect some stocks which are overvalued to come down, to cool off. But I think this is a good opportunity in the market if the stocks are coming down, and if we have such economic times. These economic times are actually creating opportunities. So now coming on to which stocks I am actually buying. So the first stock which I'm actually buying or adding, and I have made a previous video on that, and you can have a look at it in the icon above, is PayPal. But I'm adding this stock, let's say not as a bull, but as a conservative investor. So yeah, starting to buy this stock because I have made already an evaluation model, so you can have a look at it. I won't go through it again. And the second stock which I'm buying is of course Tesla, because I do think that, just imagine guys, with the Q4 earnings, if they are managing to get up to 500k vehicles, I mean in 2020 or 2021 if I remember correctly, I think 2020, the whole year sales were 500k vehicles, and now just one single quarter and 500k. Can you see the growth? This is going to be huge, guys. This is just the automotive part of the business. I have huge expectations from Tesla, and I do think this is a millionaire maker, really. So I'm adding this stock, not heavily again, because my average is at $200. So I don't want to average up for now. Yeah, because if the Q4 expectations are not met, the stock might fall. So then I will add it again. And these are the two stocks which I'm adding. And apart from that, I am playing a bit into crypto as well. So yeah, I am a bit bullish into crypto, and there are a few more stocks which I'm adding, but I would not cover in this video. If you guys would like to see which stocks I'm adding apart from these two stocks, heavily actually, because these two stocks are not heavily, like I said, PayPal, because I am not sure about the new management, how they will like play and take the company, how can they make the company more efficient. We still have to monitor that for few more quarters. And Tesla, because in my opinion it might fall, because my range is around $200 or so. So if it comes back to that range, I will buy it again, but still I'm buying, like with SIP. So yeah, so these two stocks I'm adding, but there are three more stocks which I'm adding heavily. And if you guys would like to know, then please leave a comment in the comment section down below, and I will make a video on the top 3 stocks which I am adding to my portfolio and buying heavily. So that's it, guys. That's all for the CPI numbers and which stocks I'm buying, which stocks I'm selling. So I'm buying these stocks and what we should expect from the market in 2023 and 2024. So that's it. I hope you guys liked this video, and if you did, then please don't hesitate to hit that like button and subscribe to the channel, and don't hesitate to use that like button, and yeah, please subscribe. It really helps the channel. So that's it, guys. I'll see you in the next one. Until then, stay safe, stay healthy, and ciao.